Welcome to EU Decoded, the podcast from the EPP Group in the European Parliament. Europe is at a turning point. As other major economies surge ahead, the EU must find ways to stay competitive. But how? In this episode, we break down the key ingredients for growth: innovation, productivity, and cutting red tape to ensure Europe remains a global economic powerhouse.
Competitiveness.
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 The EPP Group has long called for competitiveness to be the guiding principle of the EU, and its concerns have finally been heard. Now, a strong consensus has emerged among leaders that 2025 must be a year of real change. But what does this mean in practice?
It's simply the basis for our European social model. I mean, comparative advantage, innovation, productivity is the source for the well-being of the Europeans, that we can have a social model, that we can have ambitions in terms of sustainability and CO2 reduction. So productivity is the backbone for the European economy, but also for the European societies.
That was Christian Ehler, EPP Group spokesman on industry. In an increasingly hostile global landscape, he believes economic strength is more crucial than ever.
We are not a military force, so our global role is simply constituted by our economic strength. And I think if our economy is not competitiveness anymore, then we are losing simply jobs. I mean, the whole system we are acquainted to, and we are going to lose that if we are losing the industrial and economic basis. And we are at the crossroads, to be honest.
To reverse this trend, the European Commission has unveiled the Competitiveness Compass, a 5-year roadmap based on the recommendations from former European Central Bank President Mario Draghi on Europe's economic future.
We had been asking for that for 5 years as EPP. And I think that the first and most important, it is now in the center of European politics yet again. We had been concerned about everything, but we lost the concern about our economy. I think what is strong about that is that we are now looking to productivity, that we are looking to the burden which we had been placing on industry. We are concerned about jobs in quite principled terms.
The EPP Group Vice Chair for Economy and Environment, Dolors Montserrat, says that with the compass on the table, a new era of competitiveness is finally underway in Europe.
The Competitiveness Compass offers a clear path to boost the European Union's competitiveness for more economic growth, innovation, and less red tape. We need to close the innovation gap, reduce bureaucracy, and create more quality jobs while fighting the climate change. The Compass includes many EPP Group proposals by focusing on critical areas such as strengthening the single market, aligning European Union and national policies, enhance mobility and promote affordable energy solutions, and building a roadmap for decarbonization with a technological neutral approach, fully aligned with European competitiveness. I'm particularly pleased that the Compass also stresses the importance of the tech sectors of economy, like artificial intelligence, biotech, clean energy, robotics, or health and life science, and aims to reduce dependencies on foreign markets.
The end goal is clear: make the EU competitive again. The challenge, says MEP Christian Ehler, is now finding the right balance between productivity and sovereignty, and translating these ambitions into the individual industrial sectors in Europe.
The paper is somehow covering, on the one, competitiveness. By definition, that's productivity and whether you're competitive on global markets. And then it's sovereignty questions, where we say we might be too dependent on China, on international supply chains. And that, to bring that in a balance, that's a difficult thing, because necessarily sovereignty is as a matter of a top-down choice. So you say that is something important, that we still produce medical products, paracetamol, but that doesn't necessarily mean that it has something to do with productivity, because it could be that you can produce that in other parts of the world cheaper. On the other hand, if you look to productivity, you go for efficiency. You really place the money or your intentions where we create growth. And to bring that in a balance is a delicate issue, and I think the competitiveness compass is addressing both, but then we have to see in the individual industrial sectors where we might go and where we might put the weight of our political intentions. That might be that we have to look to the automotive sector and pretty much saying, what are you going to do with e-mobility? How do we keep up our productivity in Europe, that technology but also production is not going in other parts of the world?
Boosting the EU's competitiveness means tackling the barriers holding back growth and productivity. For MEP Jörgen Warborn, president of SME Europe, cutting red tape burdening businesses and SMEs is essential.
The big problem for SMEs is the regulatory burden, the cost for regulation. And it has increased, unfortunately, too much over the years. And we now have to do something about it. And that is why EPP suggests and really push for 1 in, 2 out. For each euro you add in cost, you reduce 2. Because then we would actually start reducing the cost for businesses, and that will increase the competitiveness, that will increase the number of jobs we create, that will increase the paychecks for jobs, and that will increase the competitiveness of European businesses.
Well, small and medium-sized enterprises are the backbone of the European Union. They represent 99.8% of all active enterprises in our union and employ around 90 million people. Yet the excessive paperwork they must fill in is slowing their capacity to innovate and grow.
The European Union has asked to do a lot of reports, and not least on the Fit for 55 package we do that. That is the sustainability agenda, that is the agenda, the Green Deal agenda. We need to reduce the emissions, that's for sure, but probably we have done it in the wrong way, because it is too much reporting obligations. And reporting, it will not solve the actual emissions, will it? No, it will only create paperwork. So now we have to rethink how we do the reporting job.
The European Commission's recent Omnibus initiative is a key step in this effort. The EPP Group sees it as the start of an unprecedented drive for simplification, and they're fully committed to improving further in the European Parliament.
The aim that the Commission has is to simplify the reporting by 25% for businesses in general and 35% for small and medium-sized enterprises. And I think this is a good thing. This is a step in the right direction, but I'm a bit hesitant that it will solve the entire simplification agenda.
MEP Jörgen Warborn calls for more to restore competitiveness, especially in these sectors where the EU is particularly exposed to international competition.
I expect that they will continue with more pieces of legislation. I think we need an omnibus for the digital issues, not only the issues regarding Fit for 55. And then I think we should continue, not only with the legislation that we did last period, but also going back 10 and 15 years, because we need a revolution when it comes to red tape. We need to slash red tape.
Cutting red tape also requires a change of mindset when it comes to shaping future policies, with mandatory competitiveness and SME checks to ensure laws work on the ground.
I like think small first. The principle of think small first. This was something that we discussed in the European Union a long time ago, but I have a sense that we have missed it a bit. What is the idea? Well, that is exactly the idea. Think about the small companies first and shape the legislation on from the small and medium-sized enterprises, because then you make it as easy as possible. If it's easy for the small, it will be easy for the big ones as well.
So far we've heard about how red tape is harming SMEs, but it's not the only challenge facing European businesses. Let's look now at our internal market. Another pillar on our road to prosperity lies in completing the single market, making it easier to work across borders and ensuring a level playing field, says EPP Group spokesman on the matter, MEP Andreas Schwab.
We are the biggest and most effective market in the world, but we are not yet a full integrated market, because we still have lots of border issues with workers, with cross-border issues, with service providers, And still there are member states' responsibilities that are not merged in a way that the economy can really take off. Let's take a company that sells a product. If for this specific product you can use exactly the same advertising, if you can use for that one product exactly the same displays, exactly the same delivery methods all over the European Union, you can erase 27 different systems that exist so far, and that makes things easier, faster and cheaper.
Well, currently the fragmentation of the single market along national lines remains the main obstacle to growth, especially for innovative companies that want to compete on a global stage. And for MEP Andreas Schwab, the competitiveness compass steers in the right direction, but now needs to deliver on content.
I think the compass is still a bit weak on how to achieve this. Because if we don't manage member states to work better together, if we don't manage for service providers to have an easy access in the country that is close to yourself, if we don't manage to make sure that workers can easily cross the border for a job, then it will be very limited, our approach.
And he put several proposals on the table.
One element is that we want the customs union to become a reality. Because what's the situation? On customs, we have a European law that applies all over the European Union, but we still have 27 national customs authorities. In the past, we had the same in different areas, but we have merged them. We have made Europe better because we have one system that works for the 27. In customs, we have still 27. That's too much. We want on the digital markets laws that are applied all over the place in the same manner. And in a lot of sectors, we want to make sure that the European economy can really use all the European potential that there is. Workforce is one element, capital markets union, access to finance, SME support, all this together can make Europe grow, and that's what the EPP stands for. But we also believe that we can only get there with a competitive economy.
In the 21st century, businesses matter more than ever. And the big elephant in the room seems to be the investments many startups need to scale up, and they don't have access to.
So we have to make sure that we have similar investment conditions like in the US, because most startups, not only for technological questions, but also for access to finance, go to the US. We need more risk capital because we have very good universities, we have very good research, but we are missing the strength to keep young people here, to make them, or to give them the impression that they have an opportunity, that they can reach out to capital, that they can reach out to the markets also from within Europe. That's a key question that we have to answer, because without that we will always run the risk that young people go away and that the big growth of businesses that we see at the moment in digital, for example, in AI, happens elsewhere.
MEP Fernando Navarrete agrees with the diagnosis.
Fragmentation of the single market is hampering the options for many industries to grow and be successful globally. And I think that's the main challenge. Maybe it's not everything, but it's 80% of the problem. If we solve this single market in various areas, in several sectors, regulatory, but also in terms of financing, being able for companies, medium-sized companies, to tap the large pool of savings that the Europeans have, that will be certainly a major breakthrough. Remember, what an innovative company needs is you have a new idea, a new product or a new process. But it's new for a limited period of time. People will start copying you, so you need to grow fast. That's the name of the game, growing as fast as you can. For that, you need two things. You need a big market, so you can sell your product as much as you can and gain scale. So that's single market. But in order to do that internally, you need a lot of financial resources appropriate for the type of investment you're doing. And you're basically, by definition, we're talking about new things, new products. Therefore, high risk, high potential at the same time. So what we need is a lot of equity market integration, because equity is what allows firms to take risks, innovate, and have the chance to be successful globally.
Building a climate-neutral industrial ecosystem requires investments of unprecedented scale. But where should the money come from? For MEP Navarrete, it is clear we have to unlock private capital for this transformation, and build competitive industries that are willing to keep investing.
The bulk of the competitiveness investment will come from the private sector because they are expecting positive returns.
The EU still lacks private investments in R&D, while in China and the US, the private sector funded 78% and 69% respectively of R&D investments in 2021. In the EU, the figure drops to 57%. And similar challenges arise when it comes to venture capital, with the US attracting 6 to 8 times more capital than the EU. But what could the EU do to drive change here?
From the public side is to provide the right incentives, the right ecosystem for industries to thrive in those areas where we have a more competitive advantage. It's not for us to decide or picking the winners, and you cannot, this is a global stage, there's global competition, you cannot win in each and every aspect, but you have to find your place where you are really competitive and exploit it to the fullest.
Incentives such as non-discriminatory and efficient tax deductions to help close the increasing spending gap between the US and China, but also becoming more efficient.
For many, many industries, energy is either the first or the second cost item. If you have a competitive disadvantage in terms of energy cost, it's very difficult to offset that just being more creative or being more innovative. You make the hurdle higher for European companies. Bringing down energy costs across the board for all sectors is a major pro-competitive policy.
EPP has always been very supportive of uniting our capital markets. It is very difficult to grow if you have 27 ways to open a company, 27 different languages, 27 different capital markets. So the key also is in uniting those markets. And I very much hope that there is the will and the political support to do that, honestly, in the next 200 days even of this commission. I think we need to show that this is a priority.
That was MEP Eva Maydell, who stresses the urgency of completing the Capital Markets Union. But there are other ways to attract capital.
By the Commission becoming an anchor investor in a newly developed fund that can invest in emerging technology, while most of the investments come from other European private funds.
She believes this needs to be a comprehensive strategy that should connect with our traditional industries.
Why do I emphasize on traditional industries? Because this is our stronghold in Europe. And I would give a comparison here with the light bulb and electricity. So if you only relied back then on manpower and did not adapt while your competitors adapt and started producing 24/7, you would have lost. If in Europe we do not embed new technologies, AI in particular, you'll probably not be able to compete. So I think this is a very key aspect of how we can have successful and actually a very meaningful industrial strategy.
For her, boosting innovation is crucial to future-proof Europe's economy.
In order for Europe to support its economic growth, I think there are perhaps 3 aspects that the European institutions can work on. First one is linked to having more European member states invest in research and development, at least 3% of their GDP. Why do I say that? Because we could see that when it comes to global competitiveness, the European countries that are performing very well and are part of the top 10 competitive countries in the world, they spend at least 3% of research and development from their GDP. So this matters. The second thing is, how do we make sure to mobilize private capital for scale-ups? And the third one is to make sure that the programs that we have at hand, such as Horizon, become simpler, become better, become easier, become more targeted, goal-oriented. So I think those 3 things that we currently have the opportunity and have the mechanism and tools from a European perspective to support should be some of the fundamentals and part of our main strategy in the next months to come to support the competitiveness of our industries.
On this, the EPP Group sees its footprint on the competitiveness compass, with several of its proposals translated into action. This includes the need to strengthen the European Research Area Act to achieve that 3% GDP target for R&D that will help foster innovation and prioritise R&D in the next long-term budget of the Union with a standalone framework programme, creating future-ready legislation for emerging technologies such as AI, biotech, clean energy, robotics, and health and life sciences is another part of the proposal the EPP Group considers a game changer to reduce dependency on foreign markets.
Often it's not who creates the technology, it's the one that uses it, implements it, and makes sure that their companies can produce faster, can produce better, have bigger profits. So I think we need to start preparing for the marathon that's ahead of us in order for us to be competitive.
Now, a big part in this European race for competitiveness lies in reducing energy costs. Here, energy prices remain 2 to 3 times higher than in other industrial countries, which represents a competitive disadvantage, says Navarrete.
For many industries, energy is either the first or the second cost item. If you have a competitive disadvantage in terms of energy cost, it's very difficult to offset that just being more creative or being more innovative. You make the hurdle higher for European companies. Bringing down energy costs across the board for all sectors is a major pro-competitive policy.
But what's the reason behind these high costs?
And one of the reasons for this is certainly over-regulation, why we have great hopes in the clean industrial deal to cut red tape and to get down administrative burdens for the extension of the energy system in Europe. But in addition to over-regulation, we certainly have structural issues. We have a deficiency of the grid infrastructure, which will not be able to meet the energy demand of Europe for the next couple of years.
That is why the EPP Group is calling for structural changes, not short-term market interventions that will prevent future price shocks.
The focus needs to be on deregulation so that the energy system is not dependent on subsidies, but that we make viable business cases for companies, for private investors to invest into the infrastructure. And if you then look into the infrastructure focus and what we need to be doing, then I think technology neutrality will be one of the core players, and we need to allow for all sources of energy, be it geothermal, be it nuclear, be it hydrogen, be it hydropower, to play a crucial role in bringing energy prices down. It's not up to policymakers to decide upon which technology is the best. We are under a pressing time frame to allow Europe to bring down electricity costs, and this we can only achieve if we are open to any technological solution, to all kinds of clean technologies, whether they promote efficiency or they generate energy. So we need to bring these technology neutrality back to the center of our energy policies.
MEP Wechsler says a realistic short-term relief measure for businesses and citizens would be lower energy taxes. Yet again, the EU should not shy away from difficult decisions.
What is very important is that we enter into a multi-stakeholder dialogue where people, industry, policymakers, and science and academia get to the table and see how to strike the balance between affordable energy, ramp up of renewable energy, decarbonized energy sources on the one hand side, but on the other hand side about competitiveness. And we need to make ourselves very honest in this respect as well. There will be no shift from fossil fuels to, let's say, green hydrogen. There will be a transition period, and we need to make sure that within this transition period, also low carbon solutions like low carbon hydrogen will have a role to play. And that's a change. It's a shift in policy focus. When we compare it to the last 5 years, we need to have a role for low carbon solutions that is stronger than the ones that we are actually attributing it in the policies at the moment.
And gives an example: hydrogen.
We see that in the United States, the Inflation Reduction Act is greatly promoting hydrogen and the hydrogen economy. China is scaling up massively in hydrogen. And Europe has a regulatory framework that's not positively pushing this market. So this must be one of the key priorities for the Commission and for the European Union, to be more pragmatic in regulating low carbon hydrogen and approaching the delegated acts.
Europe needs a competitive and sustainable energy market that balances affordability, security, supply and decarbonisation. These are the core elements for European industry to thrive. But next to achieving energy independence, diversification of supply chains and open strategic autonomy are key for the Union. And that is why Swedish MEP Jörgen Warborn insists on strengthening our trading capabilities.
We saw it during COVID, how vulnerable our supply chains was, and we understood that we have to diversify. Today we source some goods almost exclusively from China, and that is not acceptable. We need to diversify, and the way to diversify, of course, is to have more free trade agreements, because then we facilitate for businesses to trade with other countries. And that reduces the risk for Europe as such.
Well, with a potential trade war on the horizon, the group of the European People's Party says the EU must remain open to negotiations to ease any possible tensions. But it must also seize new market opportunities.
I think one of the countries that we should focus on is Australia. That would be a very good match for us. I hope that we can come back to negotiate so that we will have an agreement with Australia. Another country is Mexico, which we have actually already finished the negotiation with Mexico, just like with Mercosur. And here it's up to the Parliament and the Council now to give our consent so that we can start trade under better conditions with Mexico. And to mention another country would be India. I wouldn't say the start, but almost the start. And it's very complicated to negotiate with the Indians, but that would be so important, because that's a market of 1.4 billion people. And us, of course, in the European Union, 450 million people. It would create a huge market, and India is growing a lot, and would also be very good to diversify from China to increase the possibility for businesses to trade with India.
So, as we have heard in this episode, the EU has the tools to regain its competitive edge, from reducing red tape to completing the single market or ensuring access to capital to scale up our businesses. The question is, will we use them before it is too late? Well, that's all for today. To stay updated with the latest in EU politics, follow us on social media and visit our website, eppgroup.eu. Thanks for listening.